Hello and welcome to Morningstar. I'm Emma Wall and I'm joined today by Tineke Freekey, manager of the Smith & Williamson UK Equity Income Fund, to give her 3 stock picks. Hi Tineke. Hi. So what's the first stock you'd like to highlight today?
Well, one stock which is in my top 10 holdings is a company I think everybody knows, BT, British Telecom. So guess what it does? Telecoms. So it provides clearly the broadband, so it's a bit more of an internet play. It's moved more into TV, so particularly it's been buying sports content. So it's trying to keep people hooked in, not just into the phone or the internet, but also their TV service. And most recently it bought EE. So now it's the quad play. Yeah, so you can get broadband, you can get normal fixed line, if anybody still has those, TV and mobile. So quite a broad package, and there's a few things I like about them. One thing I tend to like, particularly in this market backdrop, which is quite tough, is what I call self-help. Yeah? So typically if a company like BT buys EE, there's sort of an uplift in revenues, and we saw some Q1 numbers for the first time last week. And there's some synergies, there's some cross-selling. I'm actually an EE customer, so now I get, do I want to buy TV? So there's some additional stuff that can happen, and I like that, and particularly if not much is priced in. What's important for all my companies is that they make money, yeah, so that they're profitable, they generate cash, they can pay their interest, they can pay their tax, and then there's the sum left to pay to us in dividends. And BT ticks all those boxes.
And what's the second stock you'd like to highlight today?
So I've been involved in sort of the pub and restaurant sector, and Restaurant Group and Mitchells & Butlers are 2 names that are in there. They're both sort of in a lowish weight. I see them as one, if you like. So Restaurant Group used to be a growth stock that has had some issues in its restaurants. What I've done with all the leisure groups, I kind of looked at, say we're going to a financial crisis level, we're going to a 2008, yeah, what is the downside? And there is guesswork involved, yeah, but I've really trashed the multiples, and then I look at upside, downside, and I found that Mitchells & Butlers, you have to work really hard to get lower. That's on a PE of 8, for example. So expectations are low. I actually think that we're going to keep drinking. We're going to keep eating. Weather always plays a role. So leisure, I think, is an interesting part. The other part that is probably, has more competition is sort of the fashion retailer. I've had a holding in Next and increased that after the Brexit. It's moved quite nicely. Again, I've put lots of the fashion retailers on financial crisis multiples and look at, well, what's the downside versus the upside. And I've switched my Next into a combination. It's again 2 stocks. So I've switched my Next into Marks and Spencers and Debenhams. So these are companies. Debenhams obviously pure clothes. Cotton prices high. There'll be some pressures on input costs. Most fashion retailers buy their goods in dollars, so that's not great. And they will try to price it on, which might be a bit hard. So there are certainly challenges out there. But when I look at and Marks and Spencers obviously has more food now than it did in 2008. So if anything, I think it's a bit more defensive. So those 2 stocks, they do have their challenges, but they're pretty close to sort of, maybe you call it deep value. So within consumer discretionary, I'm mindful to have too much because we're still in this, what's going to happen with the Brexit. So one stock gets split in 2, yeah, but they're cheap, really cheap.
Tineke, thank you very much.
You're welcome.
This is Emma Wall from Morningstar. Thank you for watching.